Welcome to the deep dive. I'm so glad you're joining us today because our mission is to unpack a really fascinating breaking news summary we got from LLM Tracker.
Yeah, and it's heavily based on a new Wall Street Journal report, which is already making massive waves.
Oh, absolutely. It's about OpenAI and their imminent initial public offering, the IPO.
Right, the big one.
But before we even get into the numbers, I have to point out the most incredible, almost meta detail about our source material today.
This is the best part.
Right. The briefing document we're literally reading from right now, the one summarizing all this highly complex financial and developer sentiment, it wasn't written by a human.
No, not at all. It was autonomously authored by an AI.
Yeah, an AI agent named Vika Ray.
Which is developed by this automation agency in Germany called Algorand.d.
Exactly. So Vika Ray just sits there and autonomously monitors human developer forums, parses the Wall Street Journal, reads macroeconomic sentiment, and just synthesizes it into this single briefing for us.
I mean, the irony there is just so layered, you know?
Yeah, it really is. We are literally using an artificial intelligence to understand how the world's biggest artificial intelligence company is preparing to hit the stock market.
Yeah, and at a valuation of over $300 billion, no less.
Right. Okay, let's unpack this. Because the core tension of this deep dive, the reason the tech community is reacting to this with such severe skepticism is the fundamental identity crisis OpenAI has to go through to even make this IPO happen.
Yeah, because you have to remember, if you go back to 2015, they weren't a traditional Silicon Valley startup at all.
No, they were a nonprofit, a pure research lab.
Exactly. The stated mission back then was all about building safe AI for humanity. It was supposed to be completely insulated from, quarterly earnings reports or shareholders demanding a return.
But now they are eyeing the public markets as a $300 billion commercial entity.
Which is a massive pivot. And to understand why developers are having such a visceral reaction, you have to look at the corporate restructuring that Vika Ray highlighted from the Wall Street Journal report.
Because a nonprofit literally cannot go public, right?
No, by definition, a 501c nonprofit has no shareholders. You can't distribute profits.
Right.
So since about 2019, they've used this incredibly weird capped profit hybrid structure. The commercial arm was technically governed by the nonprofit board.
Which is wild when you think about it.
It is. But what the WSJ reporting shows, and what Vika Ray's analysis really drills into, is that OpenAI is now systematically unwinding that. They are severing the commercial operations from the nonprofit oversight. They have to.
Right, because I was thinking about it like this. Imagine you start a free, volunteer-run local community garden, right?
Okay, I like this.
Just giving away tomatoes to the neighborhood. But then suddenly you decide to restructure that exact same garden into a massive, publicly traded commercial agribusiness.
That's a huge leap.
Right. And you have to wonder, is it even possible to keep the soul of the community garden when you have Wall Street shareholders demanding year-over-year profit growth?
Well, what's fascinating here is the inherent tension between those two worlds.
Yeah.
You just can't serve both masters.
Yeah.
A $300 billion valuation forces a company to change its fundamental priorities. A research lab can sit on experimental models for years just to test safety protocols.
Because there's no rush.
Exactly. But a publicly traded enterprise software company, they have to constantly ship new features. They have to aggressively capture market share.
Just to keep their stock price up.
Right. If you go public and miss 3 consecutive quarterly earnings, your stock craters, billions in value, get wiped out.
So as a listener, you really have to consider how a company's foundational structure directly impacts the products they build for you. When that structure goes from research-focused to purely profit-focused, the product changes.
It inevitably has to. The institutional investors underwriting this IPO demand absolute clarity. They won't accept a structure where a nonprofit board could just suddenly halt a profitable product line for philosophical safety reasons.
Which perfectly explains the overwhelming cynicism we are seeing bubble up in the developer community right now.
Oh, the developer reaction is intense.
It really is. So Vika Ray scraped the forums, Hacker News, Reddit, places where the core tech audience lives. These are the people who actually build with OpenAI's API.
The people who understand the tech best.
Exactly. And the agent estimated the community sentiment around this IPO. The numbers are staggering.
Yeah.
It's 75% critical,
Wow.
15% neutral, and only 10% positive.
Which is a remarkably bleak picture for such a historic financial event.
But wait, let me push back on that for a second. Isn't going public just the natural life cycle of a successful tech company?
Usually.
Right. Like, If they are worth $300 billion, why is the dominant tone on these forums amused distrust instead of, a victory lap?
Well, you have to look at the specific jargon flooding these forums. Vika Ray flagged terms like cash grab and rug pull.
Rug pull. That's heavy.
It is.
Yeah.
But the most prominent concept is what they call an exit liquidity event.
Okay, break that down for us. What does exit liquidity actually mean in this context?
So in a normal, healthy textbook IPO, a company goes public to raise money. They use that money to build factories or hire engineers, right?
Right, to fund the future.
Exactly. But an exit liquidity event is a much more cynical view. It's the fear that the IPO isn't about funding future innovation at all.
So what is it about?
It's about creating a mechanism for early insiders, the founders, the early venture capitalists, to cash out. They use the public retail investors as the liquidity to buy their shares.
Wow. So they're offloading their risk onto regular people.
That's exactly how the 75% critical crowd views it. They see it as a betrayal of the original nonprofit mission, turned into a massive wealth transfer.
I mean, if you're buying into a $300 billion valuation, the math is just terrifying.
It's astronomical. For the stock to just double, which is a pretty modest expectation for a growth stock, the company has to add another $300 billion in value.
That's like the GDP of a small country.
Right. And they have to do that while paying for insane compute costs. Developers know that every single API call burns massive amounts of energy and requires huge GPU clusters.
So the developers are basically looking at the margins and saying, the most explosive growth has already happened in private.
Exactly. They feel like retail investors are being invited to the party right as the host is handing over the bill.
Ah, that makes the rug pull accusation make so much sense.
Yeah, because usually there's a lockup period after an IPO, right? Like 6 months,
Yeah.
where insiders can't sell.
Sure.
The forums are anticipating a massive institutional dump the second that lockup expires.
But it's not just the developer forums feeling this way, right?
Yeah.
The skepticism goes way deeper.
Oh, absolutely. It's heavily rooted in the ghosts of tech history.
Right, because Vika Ray's report points out that seasoned market observers are making some really intense macroeconomic comparisons here.
Very specific one.
Yeah, specifically to the Netscape IPO and the dot-com bubble of the late 90s.
Which is a fascinating parallel.
So, what does this all mean? If everyone is treating this massive first-day IPO pop like a thermometer for a fever, does a huge number mean the tech industry is completely healthy? Or does it mean the fever is about to break?
If we connect this to the bigger picture, it really comes down to this concept of a lagging signal.
A lagging signal. Okay, explain that.
So if you track a hype cycle, the real high-risk, exciting part happens in private. Venture capital absorbs the risk, but they also get the massive 100x returns.
Yeah, right. Early money.
Yeah. By the time a company actually needs the public markets to sustain its massive operational costs, especially at a $300 billion valuation, the narrative is already fully saturated.
So the IPO isn't creating new hype.
Exactly. It's a receipt for the hype that has already been priced in. Seasoned observers warn that a massive valuation spike for OpenAI might actually mark the absolute peak of the current AI hype cycle.
Oh, wow.
Just like high-profile IPOs often mark the top of the late 90s dot-com bubble, the Netscape comparison might even be too optimistic.
Because Netscape kicked off a boom.
Right. Some analysts are saying this looks more like the AOL-Time Warner merger in 2000.
The ringing bell at the absolute top of the market.
Exactly. The precise moment institutional money quietly exits out the back door while retail investors rush in the front.
That is heavy. And it perfectly encapsulates this incredible journey we've tracked today. I mean, from a 2015 nonprofit lab trying to protect humanity to a $300 billion commercial titan.
The corporate evolution is wild.
And then seeing the very developers who use it turn against it with that 75% critical sentiment.
Driven by that fear of an exit liquidity rug pull.
Exactly. And now these ominous comparisons to the Netscape dot-com bubble.
But, if you really want to understand the true complexity of where we are right now, there is one final, almost mind-bending thought that builds on all this.
Oh, what's that?
Think back to the very beginning of our conversation. How did we get this sentiment analysis?
From Vika Ray, the AI agent.
Right. An AI perfectly analyzed our human anxiety, our amused distrust, and the complex financial mechanics of its own creators cashing out.
Yeah, which is still crazy to me.
But now, overlay that capability onto modern stock exchanges. A massive percentage of daily trading isn't done by humans anymore. It's executed by high-frequency, algorithmic trading bots.
Oh, wow. I see where you're going with this.
If an AI can seamlessly parse this sentiment right now, how long until AI agents are the ones making the actual stock trades on IPO day?
So when OpenAI goes public, the insiders will sell, but the buyers on the other side of those complex trades,
Might not be human retail investors managing their retirement accounts.
they might be the algorithms.
Exactly. The ultimate buyers providing this exit liquidity might be the very AI algorithms the company itself helped create.
That is. Wow, that's a fundamental shift in how the market even functions. You aren't just competing against Wall Street anymore, you're competing against the product being sold.
It's a closed loop.
It really is. Well, that is definitely something for you to mull over as you watch this IPO unfold. Keep questioning the hype, look closely at the mechanics of these markets, and definitely keep paying attention to who or what is doing the math. Thanks for joining us on this deep dive, and we'll catch you next time.